The Federal Reserve just held interest rates steady. Inflation is still creeping up and new tariffs are shaking the economy. But what does all of this mean for real estate investors? Let's get into it. What's up, everybody? It's Jamel Gibbs, your family-oriented entrepreneur. Welcome to another video. In this video, I'm going to break down exactly what's happening in the U.S. economy, what these interest rates and tariffs mean for real estate, and most importantly, how investors are setting themselves up, how they're adapting to win big in 2025. This can be the moment that makes or breaks your financial future. Well, the Federal Reserve just decided to keep interest rates unchanged from 4.25% to 4.5%. But why? Because inflation is still a little higher than what they want, and they're worried about a slowdown. This means when you borrow money, whether for a mortgage, a credit card, even a business loan, it's still going to be relatively expensive. On top of that, new tariffs on goods from China and other countries are making everything else much more expensive. And that goes for everything from construction materials all the way down to everyday essential things. And economists are already warning that these new tariffs could increase inflation from 2.5% to 2.7% or more in the next few months. And on top of that, with all of the uncertainty around interest rates, inflation and trade wars, the stock market is swinging like crazy right now. So naturally, investors are getting nervous. So people are looking for safer places to put their money. So with all of this uncertainty, banks are pulling back. It's harder to get approved for a loan, and lending requirements are stricter than ever. So what does all of this mean for real estate? First, Zillow predicts that there's going to be a 0.8% increase in home prices in 2025. But this is not happening everywhere. Some of these markets are overheated, so naturally, there's going to be a correction in those markets, while other markets with low inventory are holding pretty strong. Now, with inflation and higher costs, some sellers just can't afford to hold on to their property any longer. So because of that, we're seeing a lot more price cuts in this market, and we're seeing properties sit a little longer. On average, we're seeing properties sit for right around 66 days on the market right now. Now, these higher interest rates are also scaring off retail buyers, meaning less competition in some of these markets. This gives investors a major advantage when it comes to negotiating deals. Now, the other day, I released a video talking about this housing market shift, and I shared with you multiple strategies that will work in this market, given the economy state that we're in right now. Now, in that video, I talked about creative finance and how effective that would be for today's market. Listen, with banks tightening up on credit, smart investors are finding new ways to finance their deals, whether it's through seller financing, lease options, subject to investing, whatever the case may be. Smart investors are understanding that where there's a problem, there's an opportunity that you can take advantage of right now. So knowing all of this, what should you be doing right now? So again, in the last video, I shared 3 strategies that you can use in order to profit as a real estate investor in today's market. So what I'd like to do is share 3 additional strategies. One of them we've already talked about in a previous video in full detail, but I'll mention it here again. And the reason for that is because it really doesn't require you using any banks whatsoever in this market. So financing doesn't matter with this particular strategy. So let's get into these 3 strategies. So the first strategy we're going to talk about is targeting pre-foreclosures before they hit the auction. So a lot of people that bought houses over the last few years while prices were on a rise and while the interest rates were hiked up, they're struggling to make a mortgage payment right now. So naturally they're falling behind. So because of that, there's a huge opportunity with pre-foreclosures right now. Now, another thing you want to keep in mind is banks are not in the real estate business. They're in the lending business. So they don't want to own properties. So that leaves an opportunity for real estate investors to grab these properties up before they hit the auction. Banks will prefer to work with real estate investors before the property is foreclosed on. This can cost the bank a lot of money. So they'll prefer to get their money before the property is foreclosed. So if you catch these properties before they hit the auction, you can negotiate directly with the seller and create win-win deals. Let me give you an example of one of my coaching clients that just locked up 2 deals just like that. So he's in Indianapolis and he came across a seller who's behind on their payments. Now, this particular property is worth $230,000 if it was completely fixed up. The property needs some work. It needs about $50,000 in work, but the seller only owes $90,000. Now, on top of that, the property owner is only behind on their payments by $10,000. So what my client was able to do was negotiate a subject to deal by catching the payments back up and prevent foreclosure on this particular property. So he's able to take over the payments at $90,000 on a $230,000 property, and he gave the seller a little bit of money to walk away with. All in all, the deal worked out perfectly. Even after putting $50,000 in rehab, $10,000 in catching up on a mortgage, as well as giving the seller, let's say $5,000 to be able to walk away, by taking over the property subject to, my client will still have $70,000 to $80,000 in equity in that property. So this is the perfect example of a pre-foreclosure opportunity where the property is about to hit the auction in a couple of weeks, where my client was able to save the property from going to auction, save the seller's credit from having a foreclosure on it, and give them a little bit of money so that they can move to the next place, completely eliminating the headache that this seller had. This is a true win-win deal. Now, he also picked up another one where two older ladies were falling behind on their payments. The problem is that they got a brand new HVAC on the property. Now, with this property, they were making payments on that heating and air system because they didn't have the money to pay for it outright. So naturally, the heating and air company slapped a lien on the property. Now, what I was able to tell my client in order to make this a deal is to negotiate that second lien from that HVAC company all the way down as much as possible in order to create an equity spread in this property. We were able to do that, and he's closing on that deal as well. That's the benefit of having somebody actually show you what to do when you're investing in real estate. He got 2 deals lined up over the last 2 weeks because these opportunities are starting to pop up due to the economy that we're in right now. These are pre-foreclosed opportunities before they hit the auction. And these are opportunities for real estate investors to take advantage of in this market. So how can you find these pre-foreclosed opportunities? Really simple. You can go to my software, Investor Deal Pro, and pull a list of them. Literally do some research in order to find out who the sellers are and reach out to them. Talk to as many as possible, make offers, and get deals. Now, once you get the deal, you can decide on your exit strategy from there. So that's your first opportunity, pre-foreclosures before they hit the market. Another opportunity that's popping up right now is converting single family properties into co-living spaces. So why would this work so well in today's market? Well, high interest rates equals few buyers on the market right now. So naturally, more people are going to need affordable rentals. Now, as a property owner, by renting by the room, you can double or even triple the income that you're going to get from renting rooms versus standard leases. And being that demand is on a rise for affordable shared housing in college towns and urban areas, this leaves a huge opportunity for real estate investors right now. So how do you go out and do this? Find 3 to 4 bedroom houses in areas with high rental demand. Now, once you find these properties, you can use simple strategies like seller financing, subject to, even a strategy that we're going to talk about next with lease options in order to tie these properties up. And then once you get these properties under contract and you have complete control over them, then what you want to do is convert the property into co-living spaces and create individual leases per room. And this is the perfect opportunity for young professionals, traveling nurses, even college students who need affordable places to live. Now, I've personally marketed for tenants like these on Facebook Marketplace, websites like Furnish Finders, and also Roomies.com. Obviously, you want to do your research on these places. And also screen your tenants. Make sure you're getting good tenants into your properties that's going to take care of your property at the end of the day. But co-living spaces presents a huge opportunity, especially in markets where rents are sky high right now. Look at these as an alternative to be able to double or even triple your income from your rental properties. Now, the third opportunity that presents itself in this market, again, I alluded to this in the previous video, that's lease options. Why is this so effective for an economy like this? Well, first and foremost, there's no banks involved. You deal directly with the seller and you're not necessarily taking ownership of the property right away. What you're doing is you're taking control of the property and you have an option to buy the property at today's price, no matter what the market does when you decide to exercise that option. When I say exercise that option, I mean fully purchase the property in the future. Now, the reason why this works so well right now is because with interest rates through the roof, sellers can't find buyers. So naturally, they're going to be more open to creative situations. So again, instead of buying the property, you control the property with a lease agreement and you have an option to buy the property at a later date. So that means no banks involved for you whatsoever. And as I've mentioned before, you can rent these properties. You can sell these properties to someone looking to purchase a property but don't want to go to the bank because they can't qualify for a mortgage right now because the rates are too high or because the banking criteria is so strict right now. These opportunities present itself for you if you're looking to rent or They're a great opportunity for people looking to buy their first or their next property. Now, one of the best places to find these types of deals is to search for sellers that are struggling to either sell or rent their property right now. And all you got to do is simply offer them a rent to own agreement or a lease option agreement. Now, what you do is you lock in below market price right now with an option to buy the property within 2 to 5 years from now. Now, keep in mind, real estate goes up 3 to 4% per year. So naturally, you're going to gain appreciation when you decide to exercise that option. But you're buying at today's price or below today's price. Now, once you lock in your option, you simply market to tenant buyers who can't get traditional loans in today's market. You collect an option fee up front, and you can also decide to collect monthly cash flow as long as you stay in the deal and you control the property. So lease options is one of the best ways to lock in deals when the economy is in a situation it's in right now. And here's the thing, these 3 strategies that I shared with you in this video comes around full circle. Why? Because you can go after pre-foreclosed properties, tie them up under a lease option, and then convert those properties into co-living spaces. You see how all of that comes together? These 3 strategies are super effective in today's market. So the question is, are you going to sit and wait or are you going to take action? Right now, the smartest investors like myself, we're partnering up on deals. We're leveraging each other's strengths, and we're closing deals despite high interest rates and uncertainty that this economy presents right now. You've heard me say it before. You'll hear me say it again. Where there is a problem, there's an opportunity. Right now, the economy is in shambles. There's a huge problem. That's the opportunity. The bigger the problem, the bigger the opportunity. Are you going to sit on the sidelines? Or are you going to take advantage of it? Are you going to do something about it? Now, in an effort to help you get started, I've put together a simple JV agreement, a joint venture agreement that you can use in order to partner with other investors. And I've also put together a training on how to use this agreement. Now, this is going to be really effective for you right now because by JVing on deals, joint venturing, you're eliminating the risk that it would take in order to get started as a real estate investor. There's no money involved, there's no risk on your behalf, and you never take ownership of a property. If you want to see how you can get started with this joint venture agreement, be sure to check the link in the description box right now. And if you want to go even deeper into this topic on how the housing market shift is affecting real estate investors, be sure to watch this video right here that just popped up on the screen. So which one of these strategies are you looking to try out? Be sure to leave a comment in the comment section. Let's start a discussion about it. Also, be sure to like this video, subscribe to the channel, click the notification bell, and share this video with all your friends who are interested in real estate. And I'll see you guys on the next one. Take care.